So who can remind me where we stopped in our last class? Anybody? Hmm? Hello?
Sorry, sir, I was not in the last class.
So do you have anybody present here now that was present in the last class? Hmm? Are we all there? Okay. Okay, yeah. So let's continue. So I explained the principle and the practice of double entry. So in the previous class, so we also talked about the we talked about the uh, from what I can see. So we actually touched chapter 1, chapter 2. There we stopped at chapter 4. Chapter 4, I talked about the source document of original entry. So yeah, so we talked about the source document and the book of original entry. So then from there we'll be moving on to chapter 5. So for the chapter 5 now, so chapter 5 is majorly on the double entry. Okay, we also did double entry and the principle of trial balance. So I said the double entry principle states that for every debit entry, there must be a corresponding credit entry and vice versa. So we also talked about the ledger accounts. We talked about the types of accounts we have. Then we talked about the types of ledger. Then we did some, few examples. So then, yeah, that was where we actually stopped. Yeah, we also talked about balancing the ledger accounts and the interpretation of ledger accounts. So then, we could not touch try balance in our last class. So, but today we'll be starting from try balance. So, or do you have anybody that has a question? Maybe you have a question you want us to check together. Anybody? Okay. in the absence of none, so let's go to the trial balance. So trial balance is a statement that shows the list of balances in double entry form extracted from the ledger to test the arithmetical accuracy of the accounts. And the trial balance is drawn up at a given date after all the posting have been made in the ledger. So meaning that the total of debit and the credit side must be what? Must be in agreement. So, and more reason why more reason why it is called trial balance. So it is called trial balance because the totals of the debits and the credit side must be in agreement. Then we have the nature of trial balance. So we have about 4 natures of trial balance. So the first nature is that trial balance has a column for particular debit and credit side. So then all items with debit entry in the ledger will be debited. So then all items with credit balance, sorry, the second one says all items with the debit balance in the ledger will be debited, while the third one states that all items with credit balance in the ledger will be credited. So meaning from there, we should know that we have a layout for trial balance. So, and the layout for the trial balance is, this is the layout for trial balance. So here we have particular, here we have the debit side, and here we have the what? The credit side. So that's how the layout for trial balance looks like. Then also, I would like to talk about the difference between trial balance and balance sheets. So, and I think firstly, I will talk about the okay. So then, are you guys listening? So then we have the difference between the trial balance and the balance sheet. So for the trial balance show the list of the ledger balances, while the balance sheet is a statement that shows assets and liability. Please, can somebody confirm if you can hear me? So it will be as if I've been talking to myself. Can somebody confirm if he or she can hear me? Hello? Hello?
Hello, I can hear you, sir.
Okay. So then the second one is that trial balance is prepared to prove the arithmetical accuracy of ledger accounts. Just like we have it in the definition, that is a statement that shows the list of balances in a double entry from extracted in double entry form extracted from the ledger to test the arithmetical accuracy of the accounts. Then for the case of balance sheet, it is prepared to show the financial strength or the financial position of a business at a particular point in time. Then in trial balance, items are classified into the debit and the credit side, while in balance sheets, items are classified into assets and liabilities. So we also have the uses of the trial balance. So we have the main uses of the trial balance is to check the arithmetical accuracy, to detect such errors of posting that can easily be identified by trial balance, and to facilitate the preparation of final accounts. So yeah, then we we have the rules of trial balance. So trial balance also has its own rule. And the rules of trial balance is that in preparing the trial balance, the rules must be followed. And what is the rule? The rules of trial balance states that you debit assets, you credit liability, you debit expenses, then you credit all incomes and gains. So the first rule is that you debit all assets. Then the second rule is that you credit liabilities. Then the third rule is that you will debit all expenses. Then the fourth rule is that you credit all income and gain. So then there are, there's what we call the balancing of ledger accounts under trial balance. So, and that comes before the preparation of trial balance. So, meaning that all ledger must be posted, added, and balanced off. So, in balancing accounts, there are procedures that need to be followed. And the first procedure is that you must post all debit items, then add all the items on the debit side, then post all credit items, then add all the items on the credit side, then compare the two totals. Are you following what I'm saying? So while comparing the two totals, if the debit side is greater, then insert the difference on the credit side. Are you following what I'm saying? Then if the credit side is greater, insert the difference on the debit side. So then having done that, we have a question I would like us to share. So I would like us to work on. So the question says that Mr. Ojola has the following transaction for the month. So we have the cash purchase of 3,000 naira. So then we have the cash sales of 10,000. We have he paid wages by cash, then paid rents, then settle Olu by cash. So in this case, you are required to firstly prepare the cash accounts, or what we call the cash book. Then after that, you also prepare the ledger. So there are two different ways they can ask you to solve this. They can ask you to prepare a ledger, then before posting them to the trial balance, or they can ask you to firstly, prepare the cash book or cash account. And after then, you can now post all items to ledger, then from ledger, post them to what? Trial balance. Are you following what I'm saying now? Then for this now, so for this, let me look at, do you have a past question that has a trial balance question? So let's solve. Any one of you that has a past question with trial balance, so we can solve. Are we there? Are we there? Hello? Hello?
Hello, sir. I'm trying to access my the question, past question, but it's not good. It's not going through.
Okay. Okay. Who else again? Okay. So I'm trying to check a question for that. So can we write this question down? Are we there?
I'm with you.
Okay. So this is what I will do.
So please hold on a while, please.
So are we ready?
Yes, sir, we are ready.
Okay. Mr. Toby, ask this following transaction for the month of May 2008. Ask this following transaction for the month of May 2008. The first one is cash purchases. Cash purchases, 5,000 naira. We have cash sales. Cash sales, 18,500.
80 what?
18,500. The next one is paid wages by cash. Paid wages by cash, 2,000 naira. Then the next one, paid insurance by cash, 1,800. 1,800. The next one, received loan from Abe. Received loan from Abe, 6,000 naira cash. Then the last one, settle Tolu by cash, 3,300 naira. Settle Tolu by cash, 3,300 naira. So the question says that you are required to record the transaction, balance of, and prepare a trial balance. So the first thing is to prepare cash accounts. So under the cash accounts, okay. Can you see my screen? Let me confirm that first.
Yes, I can see your screen.
So the first thing is to prepare the cash account. So if you are preparing the cash account, we have the debit side, and we also have the what? The credit side. So this is our credit side, and this is our debit side. You know, I told you in cash book, you debit receipt, then you credit payment. Do you understand now? You debit cash receipt, then you debit you debit cash receipt, then you credit what? Cash payment. So the first transaction was what? What's the first transaction?
Cash purchase of 5,000 naira.
Okay. Of how much? 5,000, right?
5,000 naira.
So what's the next one?
Cash sales of 18,500.
So we have a sales of 18,500. So what's the next one?
Paid wages by cash. 2,000 naira.
Wages by cash. How much?
2,000 naira.
2,000. Now what's the next one?
Paid insurance by cash. 1,800.
Paid insurance. 1,800. The next one.
Receive loan from Abe. 6,000 naira. Cash.
So where will you post that to?
Receive loan from Abe. 6,000 naira. Cash. Okay, we post that in debit side.
Okay. So you can write loan, then open bracket, write AB. How much? How much loan?
6,000 naira, sir.
6,000. So the next one.
Settled Tolu by cash. 3,300 naira.
Settle Tolu by Tolu, right? So just write Tolu. How much? That's 3,000 naira.
3,300.
Okay, 3,000.
300.
3,300. The next one.
It's just the requirement. Record the transaction.
So
That's
the
all.
requirement, right?
Yes, please. It's just the requirement.
Okay, so this is what you are going to do. You add up the debit side. So you add up. What's the total on the debit side? So what's the total? Or do you want me to go back? So are you adding it already?
Okay. 24,500 for the debit side.
So 24,500. What about the credit side? How about the credit side? I'm listening. Who's doing that? Who's doing the calculation?
Okay, the total for the credit side is 12,100 naira, sir.
Okay, 12,100 naira.
100
So
naira.
you have to deduct the 12,000 because the debit side is greater than the credit side. So you have to deduct the total value for the credit side from the 24,500. So when we do that, what will be the answer?
12,100. Sorry, 12,400.
12,400.
Oh, yeah, that's the difference.
When you add, yeah, that's the difference. Thank you. So when you add them together, that will be 24,500. So then for every balance CD, you have to write your balance BD here. Balance BD of what? 12,400. Do you get it now? So having done that, you now post your ledger. So you can write posting to ledger. Do you get that now? So for first thing, you create a ledger for sales accounts. Sales account is how much?
Closing to ledger. Sales account. Okay. Sales account is 24,500. No. The sales there is 18,500.
18,500.
Yes.
So that's, you write cash. So under sales accounts
Sorry, sir.
ledger.
I want to ask a question. The requirement is you are required to record the transaction, comma,
Yeah,
balance, and prepare a trial balance. Did
yeah.
I get?
Yes. Before you prepare a trial balance, you have to do all of this first. You know, I said that trial balance is a statement showing the list of balances in a double entry form extracted from the what? From the ledger. So trial balance is always extracted from the what? From the ledger. So we are posting the ledger now. So after preparing your cash book, you prepare your ledger. Then after the ledger, you can now prepare the trial balance. Do you get it now?
Okay, sir. Which one now is the? Okay, this is the transaction now. So the balance now is the cash account we have prepared, right? Is it?
No. Do you see when they
It's
say you are
no. I'm asking based on the requirements.
okay?
You say record a transaction. Which of the one? Okay, now we have this cash account. Now we just posted the ledger. Now is it the transaction?
Yeah, it's part of the transaction. If they ask you
Okay.
transaction, the transactions are cash purchases, cash sales, paid wages by cash. They are the transaction. So you are
Okay.
record the transaction firstly, and there are some cases I told you there are two different ways. They can ask you to prepare ledger, then after
Okay.
preparing ledger, prepare trial balance.
Okay.
So, and there are some cases whereby if they give you a cash book question, if the question comes in form of a cash book, you have to solve for cash book first. You prepare cash book.
Cross.
After preparing cash book, you prepare your ledger. And there are some cases that you will there are some cases that you will be required to also prepare journal. And the
Okay.
journal I'm talking about are your sales return, purchase return, sales day
Done.
book, purchase day book. Are you following what I'm saying now? So having done all of
Okay.
that, you post to ledger. Then after ledger, your ledger balances are what we enter the trial balance, because I said it's a list of what? Ledger balances. Are you
Okay.
following what I'm saying?
Yes, sir.
So can we move ahead?
Yes, please.
So Now we post, we credit cash under sales account, under sales ledger account. Then, okay, there's nothing else. So that means you have to write your balance CD of about 18,500. So for every balance CD, there must be what? Balance BD.
Brought down.
So the balance brought down is also 18,500. So the next one we are going to post is purchase accounts. So for purchase accounts, we have for purchase accounts, under cash book, purchase was credited. So, but in ledger, you will debit purchase. So
Yes.
you debit purchase, which is cash of how much?
Cash of 5,000.
5,000. So there's nothing else again. So just balance the account. So
Okay, so why we are debiting purchase account is because purchase is an expense, right?
yeah, it's an expenses. And let
Okay.
me tell you another secret. When you are after preparing your cash book and you are trying to prepare your ledger, all the items on the debit side of the cash book will go to the
Okay.
credit side of the, whatever ledger accounts you are preparing. So that means all the items on the credit side of the cash book will come to the what? To the debit side of the ledger accounts. Take for instance, now we have sales accounts. So on the cash book, sales accounts is under what? The debit side. So, but in the ledger, you post it to the credit side. So the purchase was under credit side in cash book, but in purchase accounts, you post it to the what? To the debit side. Do you get that?
Yes, sir. It's noted.
So here we have balance brought down of 5,000 naira. So then the next one is what? What's the next one?
The next one is the receivable account. There is nothing like loan account now, sir.
The
Okay,
next
is
one,
Abi account. Abi account.
wages first. The
So
next
please, can you share this question here on the group chat? I've been trying to access the one I have. I don't know.
What did you say?
Please, can this question here be shared on the group chat or something? I'm trying to.
Okay, like are you following?
Yeah, I'm following.
I'm just picking it randomly. So it's not as if I have a question pack, but you can actually, in fact, I think from the last class, I said that go online, download ICAN past questions. So I don't know if you guys have been reading. So you can actually download ICAN past question, then check. So check to bring out questions. So I'm just trying to pick this randomly. So do you understand what I'm saying now?
Okay.
So in fact, when I wanted to post it, I have to go back to the cash book. More reason why I said you should write it down. So it's something I picked out from my head. You understand what I'm saying now? It's not as if I have it written down somewhere.
Okay. Thank you.
So can we continue?
Yeah, we can. You can go ahead.
So we have loan accounts, which is Abe. How much loan? So in this case here, don't forget on the cash account, we debited loan. So, but here you are going to credit the loan, which is cash. How much is the loan? The loan is how much? How much is the loan? The loan is 6,000 naira. So that's 6,000 naira. 6,000 naira. So from there we have the balance BD of 6,000 naira. So the next one is the next one is wages. So for wages accounts, so we under the cash accounts we credited wages, but in ledger, so we are going to debit wages. Then we have a wages of about 2,000 naira. So that's cash, 2,000 naira. Then we have the balance CD of 2,000 naira. Then we have the balance BD of 2,000 naira too. Then the next one is insurance. Next one is insurance. So we can prepare insurance accounts.
Hello, sir. I want to ask a question.
Yeah, go ahead.
Is there wages account?
There's wages accounts.
Okay, I was not listening. Okay, is together wages and salary, or can salary be also be treated separately from wages or from wages account?
Did I mention wages and salary? Wages is also
I'm just
wages,
asking. I'm just asking.
yeah, they can no if they can use two together.
Okay. Oh,
So they can either say paid salary or paid wages. Do you
Okay.
understand? So they can
Okay.
use the two at the same time. So if they say salary and if they
Okay.
say wages, it's still virtually the same thing. So are you there?
Yes,
So
please.
like there's something we call I'm trying to remember. So are you following now? So to me, are you following? The reward for labor is wages and what salary. Are you following now? The reward for labor is wages and salary. So salary is just a fixed amount of compensation which is paid for the performance of an employee. Are you following what I'm saying now? So why wages is the variable amount of compensation which is paid on the basis of hours spent in finishing a certain amount of work. Are you getting what I'm saying now? So there are some cases they can say salary. So if they are saying salary now, so you should know that salary is a fixed. Do you get what I'm saying? Let's say for instance now, if you are working, can you hear me? I want to be sure if everybody can hear me.
Yes, please. I can hear you, sir.
I'm following, I can hear you.
Okay.
Yes,
So
sir.
let's say you are working now and the agreement between you and your employer says that at the end of every month, you'll be collecting so amounts. So in that case, it is salary. So and the salary there is fixed. It is a fixed amount. So meaning it can be monthly, it can be weekly, and it can be what? It can be yearly. Are you getting what I'm saying now? Are you getting what I'm saying now? Although
sir.
both of them is often confused by people, and people normally use them interchangeably. But the truth is that both of them differs from each other and holds different meaning. So like I said now, salary is a fixed amount and wages are hourly or daily based payments. Let's say for instance now you are working and they are paying you based on hour. So you can refer it to as wages. Do you get what I'm saying now? Like people that works in maybe you developed country, they pay them wages. So that means their take home is calculated based on the numbers of hours they spent in performing a task. Do you understand what I'm saying? So while salary is a fixed amount paid or transferred to employee at a regular interval for their performances. Do you understand what I'm saying? But the main difference is that, you know, wages lie in the fact that salary is what is fixed, but wages is variable. Do you get what I'm saying now? So wages is not fixed, and salary is a skilled personnel, while wages is semi-skilled personnel. And the type of cost is that salary is fixed and wages is what is variable. Are you getting what I'm saying now? Then the payment cycle of a salary can be monthly, like I said, while the payment cycle of wages can be what? Daily. Have I made myself clear now?
Yes, please.
So, but they can, it's very under cash book, it is very rare for them to use both of them and say wages and salary. So if they want to use salary, they will use salary, and if they are using wages, they will use what? Wages. So, but for this question, what they used is wages. Do you get that? Do you get that? So what's the insurance? What's the amount for the insurance? Insurance is what?
Insurance is 1,800 cash.
So insurance is 1,800
100.
cash. So that's right cash 1,800. Then you write your balance, you balance it, balance CD of 1,800. So like I said, for every balance CD, there must be balance BT of 1,800. So the next one is what?
Tolu's account.
Tolu's account, Abi. Tolu's
Yes.
account, how much? How much is Tolu's account?
Tolu's account is 3,300 cash.
So that would be cash 3,300, right? Then we have the balance CD of 3,300. Do you understand now? Then we have balance PD of 3,300. Do you understand now? So having prepared this, we can now prepare our try balance. Are you following? So for the try balance now, so if you look at them, I say try balance as what? Particulars. It has debits and it has what? Credit. You get that? So the first thing is sales. So you write sales. Sales is how much? Sales is how much?
Sales is 18,500.
18,500. So what's the next thing after sales? Are we there? So we also have a cash balance. Are you following? We have a cash balance. And cash balance of how much? Cash balance of 12,400 naira. Are you following? 12,400 naira. So you post it to the, to the debit side of the, sorry, sales account should be, let's post cash first. Cash is how much? 12,400, Rabi. Are you following?
Yes, sir. 12,400.
Then we have sales. Sales will be posted to the credit side, and we have a sales of how much? How much is the sales?
18,500.
18,500. Followed by what? Followed by purchase, right? How much is purchase?
Purchase is 5,000 naira.
5,000.
5,000 naira.
So followed by what? Followed by
Loan
what?
received.
Eh?
Loan received from Abe, 6,000 cash.
So that's happy. How much? 6,000, right? Or where is it showing? So then the rest is how much? So what's the next one? How much is the loan received? Let's talk so
Loan
we can.
received from Abe is 6,000 naira, sir.
6,000 naira.
Yes.
Yeah, I did that already.
Okay, the
So
next one is insurance.
insurance is how much?
Insurance is 1,008.
1,008. Then followed by what?
Wages account.
Wages. Let me create another.
Please, can you come back to that place? Because I don't understand how you are posting it in the trial balance. Like, is there anyone that is okay, like this insurance now that is debit side? When posting to the trial balance, it will now be in credit side.
Okay, this is it. Look up. Look at the, it said trial balance is the posting of ledger balance, right?
Yes, please.
If you check the sales account, the balance BD falls where?
On the
Where does
credit side.
on the what?
Credit side.
On the credit side. So since it falls on the debit credit side, Abby. So since the balance BD falls on the debit side, on the credit side. So that means you have to post the sales account to the credit side of the trial balance. Are you following what I'm saying now? Don't forget the rules of trial balance. I said you will debit assets, you will credit liability. Are you following? Then you will credit expenses and you will credit what? Income and gains. So sales is like income. Are you following what I'm saying now? Sales is income and you have to post it to the credit side of the what? Trial balance. Are you following what I'm saying? Then we have the purchase account too. So for the purchase account, we have cash, then we have the balance CD, then we have the balance BD. So if you look at it now, the balance BD brought down falls on the debit side of the purchase account. So, and you have to post it. Because of that, you post your purchase account to the debit side of the trial balance. And if you look at it now, purchase happens to be an expenses. Do you understand what I'm saying now? So it is an expenses. So therefore, it will be posted to the debit side of the trial balance. Are you following what I'm saying? Then the next one is loan. You know, we said receive 6,000 naira loan from a bank. And if you look at it now, we posted the loan to the what? To the credit side of the what? Of the trial balance. Is that not what we did? And loan, are you following what I'm saying now? Loan is a what?
Yes, sir.
Is a liability. Loan is a what? Is a liability. Loan is classified as liability, right? So therefore, loan will be posted to the credit side of the trial balance. So the next one is wages. So wages is an expenses. Are you following? Wages is an expenses. So therefore, you post wages to the debit side of the trial balance. So the next one is insurance. Payment of insurance also is an expenses. So when you pay insurance, so it's also like an expenses. So therefore, it will be posted to the debit side of the trial balance too. Are you following? Then the next one is Tolu's account. So Tolu's account is, what happened to Tolu? What's the question on that, Tolu? Settle Tolu, right, by cash. Is that not what I said? So
Yes, sir.
yeah, when you settle someone, settlement in trial balance is classified as an expenses. Because when you settle someone, that means you are trying to pay the person, right? Which should be classified as expenses. And I said that expenses should be debited under trial balance. Is that clear? Yeah.
Yes, sir.
Is
It's
that
clear.
okay? So the last one is after insurance, we have what? We have wages, right? We've done wages before. Okay, we've not posted wages. So how much is wages?
2,000 naira cash.
So where are we going to post the wages now?
We are posting wages under debit.
We are posting wages under
Debit.
debit, yeah. Under debit side. So how much is wages? 2,000 naira, right?
Yes, sir. It's 2,000.
So the next one is what?
Tolu's account.
So Tolu is how much?
Tolu is 3,300.
3,300. So you post it under debit too. So can you add everything together? Add everything together. Let's see what.
Hello, sir.
Yeah.
Sorry, I want to ask something. You know, when we were starting this trial balance,
Yeah.
under particulars, you wrote cash, then 12,400. Like, is the let's say 12,400.
What did it say?
Okay, sir, continue. When I'm familiar with the question, I will ask you. It's concerning this sales of 12,400. Like, I was looking at where we got it from.
12,000. You know, I said that the 12,000 is gotten from. Are you there?
Yes, I'm there.
Okay, I said that the 12,000 is gotten from the cash account balances. So if you look at it now, I'm coming. Look at what I'm saying now. So if you look at it, look here. So you see a cash balance of what? Of 12,400. Can you see it here? So this is where we got it from. So that means you have to post this also to the, cash is an asset, right? So that means you debit your 12,400 in the trial balance. Do you understand now? So under the trial balance, you debit assets. So cash is classified as assets. So you have to debit the 12,000. So it's just like the balances in your cash account, and it has to be what? Posted also to the trial balance. Do you get that now?
Yes, I got it. But all the things that made up that cash, we are posted differently, like on their own.
Yeah, you still have to post that too because it's the balance of the is like a cash balance, so it has to be posted too, irrespective
Okay.
of whether you've posted them, each items or each transaction on the trial balance. You still have to post it because it's a balance, it's a cash balance, and it has to be posted. So can you check the differences now? And let's see. So add all the items on the debit side and add all the items on the credit side, and let's see if we are going to get the same value. So for the debit side, what's the answer? Are you doing that already? Our
Yes,
class
sir.
our class tonight is very slow, and if we continue like this, we might not be able to cover up. It's as if you are the only one responding in the class. I don't know what happens to others. So if we continue like this, we might not be able to cover up. I expect you to have be done with the calculation so we can move to the
Okay,
next.
sir. It's giving the same thing. The debit side, I got 24,500. Then the credit side is also 24,500.
So 24,500
24,500, yes, sir.
and 24,500.
500. Wow.
So can you see it must be the same thing, and that is why it is trial balance.
Okay.
So the answer you get in the debit side must be the same thing as the one you will get in the credit side. Do you understand that? So
Yes,
then
sir.
let's so we have the errors that might affect or not affecting trial balance agreements. So the first one is, the preparation of, are we listening? The preparation of trial balance does not prove that transactions have been completely and correctly recorded in the proper accounts. So there are errors that do not affect the agreement of trial balance, and they are, the first error is what we call the error of omission. Are you following what I'm saying? So the first error is error of what? Omission. So the error of omission occurs when a transaction is totally omitted from the debit and the credit side of the account. Are you following? So when it occurs when a transaction is totally omitted from the what? From the debit and the credit side of the account. So that can lead to error not disclosed by the what, or error not affecting the agreement of the trial balance. Then we also have another error, which is the error of principle. So the error of principle there states that when a transaction is posted to the wrong class of the account, an error of principle will occur. So an example is where a trader purchases an additional motor vehicle for 950,000 naira in cash and treated the transaction as a motor running expenses by crediting his cash or bank account and debiting motor running expenses account. So we also have the compensating error. So that one occur when errors of the same amount are posted to two sides of the ledger. Therefore, they can cancel out, each other. So then we have error of reversal entry. So that one occur when the double entry for a transaction is reversed. So meaning the account to be debited has been credited and the account that is meant to be credited is debited. And we have reason for this, reason why trial balance may not be balanced. So we have the error of posting, we have wrong entries in the ledger, we have wrong figures in the ledgers. Then we also have the errors in addition. So the errors in additions can be as a result of overcast. So what does overcast means? When you over exaggerate figures. So it can also cause the trial balance not to balance. Then we have the undercast. So undercast means when you undercast a figure. So it can also lead to your trial balance not balancing. Then we have the extracted balance placed on the wrong side of the balance sheet also can also be another reason why the trial balance might not be balanced. Are you following what I'm saying now? So then from there we move on to what we call the suspense account. So when you hear the word suspense account, are you following? Is everybody following?
Yes, sir.
So let me quickly explain the correction of errors. Then from there, we move on to the suspense account. So when we say correction of error, the main purpose of trial balance, like I said earlier, is to show the arithmetical accuracy of the ledger, of the entries in the ledger. So then the two sides, the debit side and the credit side, must be equal. And if the debit side is not equal with the credit side, so we can say that there is an indication of what? Error. So in fact, in some situation, they can say that there are errors which may not be disclosed by the word trial balance. And these type of errors are refers to errors that do not affect the agreement of the trial balance. Then those errors that do not affect the agreement of the trial balance are the errors of omission. So, now I want to talk about how those errors can be corrected. So, for the case of error of omission now, so it is an error whereby a transaction is completely omitted, from the word omission, from the book of accounts. That is, from the debit and the credit side, both sides of the transaction are omitted. Let's take for instance now sales of goods of 1,000 naira to buyer has been omitted from the book of accounts. So do you know it can also affect? Then we have the error of commission. So the error occur when the correct amount is entered in the wrong person's account, e.g. sales of goods to Tayo and is entered into Shola's account. Do you get what I'm saying now? So it can also affect the trial balance. So we have the error of original entry. Let me cite a good example. Let's say the purchase of goods of 490 from Olu entered into the account as 940. Can you see that now? So that's an example of errors of original entry. Then we have the error of principle. So it occurs when transactions are entered in a wrong what? In a wrong class of accounts. For example, payment of 40 naira for motor expenses entered into motor van accounts. So it can also lead to errors of principle. Then we have the compensating error. So that one occur when error of same amounts are posted to the two sides of the ledger. So which will affect or which will cancel out each other. And these two sides may be overcast or undercast by the same amount. Take for instance now, sales account is undercast by 180 as also a salary account. So then we have the the complete reversal entry, which I can give a good example of a receipt of cash from Toby, which is about 230, has been entered on the credit side of the cash account and debit side of Toby's account. Do you understand what I'm saying now? So these are the possible errors that can affect one another. So, and the best way to correct this now, okay, I will just give you a very good example. So the first one is I'll give you an example of error of omission. Now let's say for instance now error of omission. Under error of omission, who can remind me the example I stated? I said, from the debit side and the credit side, both sides of the transaction are omitted, e.g. a sales of goods of 1,000 naira. Are you following what I'm saying? Or better still, let me give you an example. Let's say sales of motor van. Are you following? Sales of motor van of about 800 naira had been entered in the sales account. The sales of motor van, which is of 800 naira, had been entered into the sales account. So that can actually lead to what we call the corrections of error. So, that will lead to what we call the error of principle. Do you understand now? So the error of principles, so that means the error occurs between the motor van and the sales account. So in demonstration in the ledger, so that means for you to be able to, in demonstration in the ledger, so you can decide not to post anything under the motor van account, while under the sales account, you can credit the sales account. So meaning in order to correct that error, so that means you have to debit the sales account and you credit motor van account. So another example is, let's say a purchase of goods from Toby about 720 was completely omitted from the account. So, when you hear the word omitted, so you should know that that is error of omission. So purchase account, so which will affect both the purchase account and the Toby's account. So in demonstration of this, that means purchase account has been omitted, while Toby's account also has been omitted. So initially, purchase account should be debited, while Toby's account should be credited. So in order to correct this, you have to debit purchase accounts. Do you understand? Then you credit Toby's accounts. Do you get what I'm saying now? So these are the possible, examples I can cite. So then from there, I can also explain the suspense account. So let me quickly explain the suspense account. So when you hear the word suspense account is used to record the difference between trial balance. Are you following? So suspense account is used to record the difference between trial balance, totals. Do you get what I'm saying now? And or let me say, it is used to record the difference in the trial balance temporarily until errors are detected. Do you understand? So suspense account is what you use to record temporarily until you detect the error affecting the trial balance not to be balanced. And it is very important to note that suspense accounts, or it is very important, okay, let's say especially maybe in the exam, you are trying to post a trial balance and you discover that the two accounts are not balanced. So the first thing to do is to open a suspense account. Do you understand that? So when you open the suspense account, when the trial balance total disagree, so you only open the suspense account if instead of you to waste your time, so just quickly open a suspense account. The case of whereby if the trial balance totals disagree and errors are not discovered, so just open a suspense account. And the uses of suspense accounts is that it's used to record differences temporarily until errors are detected. Then it also provides an account for deferred expenses. Then not only that, it also provides an account to which one side of the double entry recorded of transaction. Boss. Yeah, I did take class. Okay. So then, sorry about that. Apology. So then provides an account to which one side of the double entry recording of the transaction can be posted until its correct destination is known. Do you get that now? Then we also have the nature of suspense accounts. So that means for the nature of suspense accounts, it states that when there is disagreement between the debit and the credit side of the trial balance, the normal practice is frequently adopted is to insert suspense accounts immediately. So let me show you here. Are you guys listening?
Yes, sir.
What happened? We've not eaten, Abby. How many of us have eaten tonight? Are we getting it?
Yes, sir.
I don't like the vibe I'm getting tonight, but it's fine anyway. So let's say the debit side of the trial balance, this is the debit balance. Then we have the credit balance. So let's say the debit balance is 21,000 and the credit side is, let's say 19,000. Are you following what I'm saying now? So if you look at it now, the debit side is not balanced and the credit side is not what? The debit side is not equals to the debit side. So you can say that the debit side is not equals to the credit side. So when this happens, don't bother yourself. So just insert suspense accounts. Are you following? So in order to cause the debit side to be equals to the credit side, so just calculate the difference between the debit side and the credit side. So if you calculate the difference between the debit side and the credit side, which is about 2,000, am I right? Are we following? So you can
Yes,
write your
sir, we are following.
suspense account, which is 2,000. So when you write the suspense account, so just calculate everything, which is 21,000, then 21,000, 21,000, 21,000. Do you understand what I'm saying now?
Yes, sir. Sir.
Yes.
Hello, sir. Yes, I want to ask question relating this to what we just finished doing. like the other trial balance we just finished doing. Like in this case, the total from the debit and the credit side, they were the same. Okay, like when we have this kind of question, okay, let's assume that this trial balance that we just finished doing, maybe one side of it was more than one side, and we have traced, I don't know. Okay, for time's sake, can we also open a suspense account?
Yeah. In
Okay.
fact, I think I remember when I was writing one, I'm not sure if, no, it's not ICAN exam. Maybe when I was writing my accounting in my 300 level, I did economics, yeah, in my undergraduate. So I was writing, there's one particular course called Eco 311. So it's just like introduction to accounting. So what really happened is this: I came late to the exam hall. So we were supposed to be given 2 hours. So I came in 1 hour after because I had one professional exam. Okay, yeah, I was writing ICAN exam then. So when I got back late, so I saw the question. So I just quickly rush. So when I think part of the questions I answer, trial balance happens to be one of those questions. So why maybe trying to rush? I was just trying to beat the time. I discovered that my trial balance did not balance. Yeah. The debit side is not equals to the credit side. So what I did, because there was no time to be checking over again. Imagine if I had the time, I would have loved to go back and check what exactly is wrong because I didn't have enough time. So the only thing I did in that case is to introduce suspense accounts. So I introduced suspense accounts and I was able to do that. But this is an exam. But in the case of if it is the real accounting setting, I mean the real settings. So the suspense account there is just like a temporary account until you deduct the error or until you detect the reason why the debit side of your trial balance is not equal to the credit side of your trial balance. But in that case, if you are solving and you discover that they are not balanced, so just prepare suspense accounts rather than disturbing yourself. Do you get that now? So in that case, you won't only stop there. So you continue by writing suspense accounts. So you write your debit side, then your credit side. So if you look at it now, the suspense account under the trial balance was posted. The difference between the debit side and the credit side was posted where to the credit side of the trial balance. So that means here under the suspense account, you are going to bring the difference here and call it your balance brought forward of 2,000 naira and shikeno. That's all about suspense account. So just bring your, the difference here, then you are done. Do you understand now? And if you look at the question, the example I gave you is a suspense account that affects the credit side or a suspense account. If you look at it now, the credit side is not equal to the debit side because the debit side is greater. In a case of whereby if the debit side of the trial balance is greater than the credit side of the trial balance, so this is how your suspense account will appear. Am I making sense? Am I making sense?
Yes, please. Go
Yeah.
ahead.
So this is how it will appear in a case of whereby if the debit side of your trial balance is greater than the credit side of the trial balance. So that means a suspense account will be open and credited with the differences. So look at this now. In that case, you open a suspense account, then credit the differences. So in a case of when the credit side of the trial balance is greater than the debit side of the trial balance, so you will open a suspense account and debit the differences. Am I making sense?
Sir.
Okay. You have a question? I'm listening. You have question?
No, sir, no question yet.
Okay. So do you get that now?
Yes, please.
So then
Yeah.
we have errors that we affect. Okay, we've talked. Then we have I think yeah, that's all about suspect account. So maybe you can practice more questions on it. And in a case of if you have, you know, if you have issues, so you can bring it to, you can send it to me and let me check. So the next topic is called the control or total accounts. Are you following? Are we following the control accounts? Are we still there? Hello. Hello. What happened to you guys? You guys are not responding. Okay. So let's go to control accounts. When you hear the word control account is a memorandum account into which are transferred in totals and the various amounts of the transaction which have been debited or credited in details to individual ledger accounts. So a control account is in respect of a particular ledger, therefore operate as control account. So if you look at it now, let's say in a small entity, so it may be possible for one person to maintain all the ledger accounts. Where a business maintain a large number of accounts, it will become necessary to divide the ledger into sections and assign the recording of each section to different person for internal control purpose. So the main areas to which such ledger can be divided are the subsidiary ledger, trade receivable ledger, then we have the trade payable and the ledger and the general ledger. So then when you hear the word control, what comes to your mind? A control account is an account, the ledger of which reflects the aggregate balance of many related subsidiary accounts which are part of the double entry system. Then we have the classification of control accounts. You can read the differences, the sources, and all of that maybe later on your own. So we have the classification of control accounts. We have the sales ledger control accounts. Then we have the purchase ledger control account. So when you hear the word sales ledger control account, it's another name for sales ledger control account is called the total debtor control accounts. Are you following what I'm saying now? It is also called the total debtor control account, and it is the control account for sales or debtor ledgers, and it represents all the entry posted to the sales ledger as if only one debtor existed. Then for the sales ledger control account, it is divided into two sides of the accounts. We have the debit side, then we have the credit side. So under the debit side of the sales ledger control account, you will debit sales credit. You debit interest charges, you will debit the zonal check, you will debit the zonal bill, you will debit carriage outward, you will debit cash refund, you will debit discount disallowed, you will debit notes issued. Then while under the credit side, you will credit cash received from customer, check from customer, discount allowed, bill receivable, contra. Then you also credit discounts allowed. Are you following what I'm saying now? So then let's take for instance now we have let me see if there's an example. How many of you have the material here with you? You have your ICAN material. So if you have your ICAN material, you can check study section. You can check page. Let's quickly solve that question there. So you can check page 117. So depending on the time you will get to page 117, let me quickly explain purchase control account. So purchase control account is refers to as a total creditor control account and it is the control account for purchase of creditors ledger. Are you following? Then the procedure is that you will debit cash to supplier, check to supplier, return outward, bill payable, credit note received, discount received, contra entry. Then you credit purchase, discount received withdrawn, and cash refund. So if you check your material now, you see illustration 6.1. I will quickly solve that now. We have extracts from the book of JK Limited showing the following balances for the month of June 2006. So in this case here, we are to prepare the sales ledger control account and the purchase ledger control account. So the first thing I would like to do is to prepare the sales ledger control account. Are we there? Are we there? Are we there?
Yes, sir. Sorry, sir. What page are you?
117. Are we all there? Have you seen it?
No, sir. Where I'm saying says ledger control account is 2 something.
Okay, did you see JK? Did you see the question I'm about to solve now? Huh?
Hello, sir.
I'm trying to see if I can.
Is it JKO Limited?
Yeah, JK Limited.
JKO
June,
Limited. Okay.
June 2016, Abi.
Oh.
Eh?
I'm saying June 2022. Abi.
So read out the question there.
Say illustration 8.1. Extract from the book of JKO Limited shows the following balance for the month of June 2022.
Okay.
Sales ledger balance is June 1, 2022. Purchases ledger balance.
No, the figure.
June.
What figure?
Okay, 4,702.
Yeah, same question. So
Okay.
can we go ahead now?
Yes, please.
Okay, thank you. So for the sales ledger balances, right? We firstly want to prepare our sales ledger control. So the first thing says that, so if you want to prepare this kind of account now, you have to write, my own states 2016. So you can write 2020 in your own, if that is what it states. Then under here, so then I have my Naira here. So then here I have 2016 June. Then I have my Naira here. So can we go ahead? So we have sales ledger balances. So that sales ledger balances is called the balance BF. Are you following what I'm saying now? Sales ledger balances is called balance BF. That is BF of how much? Of 4,702. Then the next one is, okay, purchase ledger balances will be posted to, okay, does anybody can you hear me? Can you send that?
Yes,
Can you
sir.
do a screenshot of that question? Send it on the group so that everybody can have access to it.
On the WhatsApp group or here?
Yeah, WhatsApp group page.
Okay, sir.
I'm seeing people's chats. Once you are done, let me know.
So I've sent it.
Okay. Does everybody has access to it now? So can we continue? Does everybody have access to it now?
Yes, sir.
Hmm? Does everybody have access to it? Promise has been the only one talking since morning. Does everybody have access to it now? Okay. So then we have okay, I said we have sales ledger balances. That will go to the sales ledger control account. So the next one is sales journal balances. Are you following? So the sales journal balance of about 37,000 437. Are you following? So that will be posted to the debit side. So that will be sales of about 37 437. So then the next one is with okay, purchase journal balances. That will go to the purchase ledger account. Then we have the return inward. So the return inward will be posted to the credit side of the what? To be posted to the credit side of the sales ledger account, which is return inward. Return inward of how much? Of 910. So then the next one, we have return outwards, so that will not be included. Then we have the receipts from customer cash. Receipt from customer cash will be posted to the credit side of the what? Of the sales ledger control account, which is 38,529. So the next one is discount allow of 1,345. So then the next one is payment to supplier. Payment to supplier will not appear here. Then the next one is discounts received. We are not going to post it here. Then we have the irrecoverable debts. So irrecoverable debts will be posted to the what? To the credit side of the sales ledger account. Let me just write I debts. So how much is it? That's about 115. Then followed by sales ledger setup. So sales ledger setup will be also posted to, you can write setup to the credit side of the what? Of the sales ledger control account, and it's about 209. So the next one is, okay, for the sales ledger setup, okay, then we have the purchase ledger setup. So that purchase ledger setup will be posted to the debit side, which is setup of about 110. So can you calculate the both sides now, and let's see which one is greater and which one is who is doing the calculation for us? Who's doing the calculation? Who is doing the calculation? You. Nobody, right? Or should I assume that you are going to do it later? So we should move on to the next one. Eh? Okay, let's move on to the next topic then.
Oh, sir, please, I have issues with this trade receivables and trade payables. Honestly, I've been battling with it. I'm confused. Like the items, I don't know where to post each one. Like I don't know if you can throw more light. Is there a way that we can be able to, whenever we see the question, we'll know that okay, this for credit side, okay, this for debit side, because I understand trade receivable, that the debit side, I understand it, that any incoming, like anything that will bring additional income to the entity or to the business, will be on the debit side of the trade receivables. Okay, and anything that the company or a business had to pay, like their liability, or let's say their liability, or like their expense, will be on the credit side of the trade receivables. But these trade payables, and there are some items that I'm not familiar with, so where to put them, so it's confusing me. So please, can you throw more light on those areas? Thank you, sir.
Okay, so let me do that. Yeah. Okay, for me to do that, I will explain the sales ledger control using the items and the source. You know, if you look at it now, I think I was trying to explain. I think the first thing is understanding what should go to the debit side, right? And what should go to the credit side, right?
Yes, please.
So then for the opening debtor, you know, we have the opening debtor is the source of the opening debtor is the debtor balances brought down at the end of the previous period. Are you following what I'm saying now? So is the debtor balances brought down at the end of the previous period. Do you get that clear? So, and that should be posted to the debit side. Then we have the credit sales. So the credit sales in this case here is the total from the sales journal. You get, I actually treated sales journal with you. The credit sales is the total from the what? From the sales journal, and it should be debited on the what? Sales ledger control account. Then we have the return inward. So the return inward there is the total from the return inward journal. I treated return inward journal with you. And are you following what I'm saying now? Because are you there? I want to know if you guys are there. I don't like the response tonight. I don't know. In fact, it's even helping me to know whether you are getting it or you are not getting it at all. So, but let me just do what I have to do.
Please, can I say something?
Okay,
I've
I'm
been raising
listening.
my hand since. Well done, sir.
Yes,
I
sir.
think what is wrong with majority of us today is exam is very close, and the interest of majority of us maybe is diverse to what majority are or what we are getting. Because to somebody like me now, I'm just following along so that my sister that is asking question will not be confused. Me, I'm looking at area of actually bad debt and manufacturing accounting. That's two areas I actually need urgent assistance. Maybe some people have that kind of thought in their mind too, that they have a specific place they are looking at. The sister that is looking at this side, maybe so in order not for her not to be discouraged or distracted. That's why I was just following on. That's why I was not interfering, because I don't think I have much problem with that area. I don't know if you understand me, so that if I am not talking much, it will not look like maybe we leave you, but we are following you fully. Thank you.
So, I think
Okay,
before
sir. Sorry, sir. Sir, sorry. Okay, does that mean that this area now you are fine with it, right? Sir.
To me, I
Yes.
don't have much struggle there. That's why I'm not asking
Okay.
much questions from
Okay,
me.
okay. I think that because as you complain concerning the area of manufacturing account, those areas that are not my problem, as you said. You get now we have our different places. We are okay. Please, I can just beg, sir, if you can. Okay, after throwing more light for me on this trade receivables and payable, then you can now ask if anyone has any other place that you can throw more light, so that I think it will also help.
I think before the class started, I pushed a question. That was the first question I pushed. Do you
Yes.
have a place, a certain place you want me to explain? Nobody responded. So I felt maybe I should continue from where I started. If you guys had responded to that, I would have attended to every question. This is a revision class. So I asked before the class started, like, is there any area you want me to throw more light on? No response. So I felt maybe I should continue from where I stopped. So let me quickly explain this. So from there, I'll go to manufacturing accounts. So if there's anybody again that needs maybe a part you want me to shed more light, so we move on. Still, we are able to settle the whole thing. So is that fine by us?
Yes, thank you.
Okay. Yeah. So I said that under the returning word that you will debit the total sundry. When I was explaining return reward, I said you will debit the total sundry under the return inward ledger accounts. Are you following what I'm saying now? Then we also have the check received. So check received is from cash book. Yeah, we have bank book, we have cash book. So, under the cash book, we have different, types of cash book. Then we have the closing debtor also. So the closing debtor, there is just the debtor balance brought down at the end of the previous period. Do you get what I'm saying now? Then we have the discount allowed. Discount allowed is found in the cash book also. If you remember, that is under the 3-column cash book. Then we have the bad debt. So the concept of bad debt is gotten from the general journal. Do you get what I'm saying? So for you to know now, looking at this question now, we have the sales ledger. So sales ledger should be balance BF. So which should go to the debit side of the sales ledger control accounts. Then for the purchase ledger balance, let me just quickly describe them. When you see the word purchase ledger balance, it will go to the credit side of the purchase ledger control accounts. Are you following what I'm saying? Then we have the sales journal balance. So the sales journal balance will go to the debit side, while the sales journal balance, the purchase journal balance will go to the debit side of the purchase ledger control account. Then followed by the return inward. So the return inward will go to the credit side of the sales ledger control account, while return outward, it's a return outward is another name for return outward is purchase return. Another name for return inward is sales return. So when you see return inward, you should know we are talking about sales return. Do you understand now? Goods sold that was returned. So it will go to the sales ledger control account, which will be debited. Sorry, which will be credited, not debited. It will be credited. So then for the return outward is another name for purchase return, which will be debited under the purchase ledger control account. So we have the receipts from customer. So when you hear the word receipts from customer, you should know that it's a concept. You know, the customer there is talking about sales. So when you hear the word customer, so you should know that it should go to the sales ledger control account, which will be credited under the sales ledger control account. Then we have discount allowed. So discount allowed will be credited under the sales ledger control account, because if you look at your cash book, your 3-column cash book, are you guys following? Are you guys following? So if you
Yes,
look at,
sir.
okay, if you look at your 3-column cash book, you know, you will discover that we have dates, particular, folio, cash, bank, discount allow on the debit side, and on the credit side we have date, particular, folio, cash, bank, discount receive. So your discount allow is on the debit side of the 3-column cash book. So in that case, you will credit your discount allow under the sales ledger control account. So that means for you to be able to treat your control account, you must understand the concept of each items, and not only that, understand their source, understand their position in each source. Do you get what I'm saying now? Then we have what else again? We have payment to supplier. So you should know that payment to supplier will go to where? To the purchase ledger control account under the debit side of the purchase ledger control account. Then we also have discount receive. You should know that discount receive is on the credit side of the what? Cash book. So which will automatically go to the debit side of the purchase ledger control account. Don't forget, under cash book, debit side takes into consideration cash receipt, while credit side takes into consideration cash payments. Then we have irrecoverable debt written off. So the irrecoverable debt written off, so will be posted to the what? To the credit side of the what? Sales ledger control account. Then we have the sales ledger setup. So the sales ledger setup will be posted to the, to the credit side of the sales ledger control account, and for the purchase ledger setup will be posted to the credit side, the debit side of the sales ledger control account. So you will now post that same item, which is the sales ledger setup. We go to the where? To the debit side of the what? We go to the debit side of the sales ledger control account, and the purchase ledger setup, we go to the what? Credit side of the purchase ledger control accounts. So just take your time to go through it again. So maybe if there's a point you don't understand, you can drop your question on the group. So while I try to explain or share more light. Do you understand, ma?
Okay, sir.
So let's go to purchase manufacturing account, right? Are you there, sir?
Yes, I'm with you. It's not all the manufacturing account that I need. I just need clarification between margin, markup, and makeup. I don't know if
Okay.
you understand what I'm talking about.
Okay, come
The
again,
difference
please.
between three of them. I know when you will talk about transfer of cost of production during the transfer, the questions normally say either you use margin or you use makeup or
During the
transfer the cost of
come again, please.
the
During the transfer of cost, right?
transfer of cost of production or
Okay.
production cost.
Okay.
There is normal production cost, and they may actually ask us either to increase it or bring it down at a particular percentage.
Okay.
How to calculate those percentage is actually what I am struggling with. Every other thing, prime cost and how to get to net profit, that's no problem. But that cost transfer is actually where I need clarification.
So you had issue with margin,
Yes.
just margin alone.
Markup. Margin and markup. Markup or makeup, I don't know. I think one of them.
That's all right.
Yes.
Okay. All right.
Then in the bad debt, in the area of bad debt, how is bad debt calculated? I sent some question into the group, but it was not responded to. How is the bad debt calculated? I've
Sorry,
checked
when
it
did you
from
send it?
my handout again and again. It's still inside the group there. You responded to it, but the answer they gave me in the solution they gave was different to what you gave me. And I sent back the solution they gave, but you didn't respond to it.
Okay. So let me explain your the manufacturing account now. So I'll just take everything together. So then I'll attend to the next question. I think I don't want to. I actually saw that you responded, but I think I thought I responded. So though you should know that not all the questions, like not all the answers are sometimes always are correct also. So there can be a mistake. So the first thing, let me explain the difference between the margin and the markup. Do you understand now? So, and the reason why I'm going to start by explaining that is because it creates a lot of confusion for many people. Do you get? So the margin and the markups are two ways of measuring the profitability of a product or service. So although they are related, but they are not the same thing. So when you hear the word margin, margin is the percentage of revenue that is left after deducting the cost of goods sold. Am I making sense?
I'm with you, sir.
Yeah. So, and the cost of goods sold there is the amount of money that is cost to produce or provide the products or service. So why margin shows how much profit a company makes for each, revenue. Let's take for instance now, if a company sells a product.
Sorry, sir, can you come again? Margin, the first one
I
you
said
said is margin. The second one you also said margin.
Yeah, I say margin is I'm still trying to explain margin. I say margin is the percentage of revenue that is left after deducting the cost of goods sold. Do you understand now? And I said it also shows how much profit a company makes for each revenue. Do you understand what I'm saying now? So, and I'm trying to give an example now. And the example is that let's say a company sells a product for 10 naira and the cost is 6 naira. So that means the difference between the both is the profit, right? Because if the cost of producing a good is 6 naira and it's being sold for 10 naira, so that means the margin there is what, or the revenue is what, is 4 naira. So that means, in economics, profit is calculated as your total revenue minus total cost, while in accounting, it is calculated as revenue minus what? The cost of production. Are you following what I'm saying now? It's still the same thing. So in order to calculate, am I making sense?
I'm with you, sir. You are making sense.
In order to calculate the margin now, so you have to reduce your cost of goods sold from the revenue. Are you following? So then for the markup, so markup is the percentage by which the cost of a product or service is increased to get the selling price. Why? Because it shows how much more a company charges for a product or services than what it cost them. Take for instance now, I'll use that same example. If a company sells a product for 10 naira and its cost is 6 naira to make, so the markup is 4 naira. Do you get what I'm saying now? So, and to calculate the markup now, we have same way of calculating. But the thing I want you to understand is that during the transfer of cost of production, it is very important to understand the difference between margin and the markup, because they affect how much profit a company makes and how much it charges its customer. So let's take for instance now, if a company wants to achieve a certain margin, so they need to apply a higher markup to its cost of production. And if a company wants to achieve a certain markup, so it needs to lower its margin. So using the wrong term can result in setting price too high or too low, which can affect both sales and profit. Don't forget now, if I'm saying sales, I also mean what?
Revenue.
Revenue. Do you get what I'm saying now? So I'm just trying to see an example here. Maybe if you have an example in your, what's it called? In your past question there, you can let's solve. Is there a question you are trying to solve that I should use that as an example? Maybe you will understand better, sir. If you have a question,
Let me check my system and look for the insight I was using. I was using one particular insight where I got to the question.
Okay.
But you can continue while I look for it.
I'm trying to check your material too. Sorry, in your material, what page can we find the manufacturing accounts? Is somebody there?
The material is just something else. We have to look for it actually. way it was arranged is you can't follow the times the table of contents. You have to look for where it is. I'm on it. I'm looking for it actually. I will soon be there. Sorry, I'm coming.
Okay.
Or if anybody see it before me. I'm on it, but if somebody find it before me, I won't mind. Because I was using my phone to connect before.
Okay. Are you using the ICAN material?
Okay. Yes, page 276. 276 in our own material. But it's like your material is somehow different to our own.
Okay. Okay, what happened in 276? We have illustration.
Okay.
Copy enterprise.
Yeah, let me see the illustration there. In 276, we have an illustration there from Koiki Yes Enterprise. It's a manufacturing entity and has presented the following balance for the year ended June 30, 2022.
So we have inventory of raw material at 80,000, right?
Yes.
So do you want us to treat that question?
No, they want us to treat one that have that transfer of cost. But it seems I'm not seeing anyone like that. Okay. The one, I think the other one, illustration 11.1, has 25%. So I think we can use that.
11 points. That's page what?
Page 77 on our material.
Page 77.
277. We are told to use the same Koiki material and information to solve it, but they now give us additional information as for the transfer of the price. So they said 25 factory to marketing department at the cost of plus 25%. So that plus 25% is how to add it to that. That is actually where I'm struggling with. Every other thing they have done in the 11.4, that is no problem. I can handle that. But that transfer at 25% is where I need help. Thank you.
Hello, can you hear me?
Yes.
I apologize. Can you hear me?
Yes.
Okay, my phone rang. There was a call, like a WhatsApp. Sorry.
It's all right.
Okay.
Yes. It's still the same Koike Enterprise manufacturing details. They now give us another additional information on page 277. They ask us to transfer
Pricing, right? Hello.
finished product from the factory to the department at cost of plus 25%. I need help.
The material you are using, can you send it to my DM?
It's our same material.
Okay. You said
Yes.
page 277. I'm seeing that given the same question in illustration 12.4, right? above.
Exactly.
Let's assume that the production department transferred the finished product from the factory to the marketing department at cost plus 25%, right? So
Yes.
is that what they asked you to do? So
Yes.
in that case, yeah, that means you have to prepare another manufacturing. So let's try that out. So I'm coming. Okay. So in order to do that now, there are two ways we can do this now. So the first thing is to identify, okay, we have the raw material first, right? So let me quickly explain. You know, from the 2.4, we are giving the raw material to be what? 80,000, right? Are you
Yes.
following? So since we are giving 80,000 as the raw material, so you have to post it. You know, we have the two side, we have the debit side, then we also have the credit side. So you post your raw material on the what? On the debit side, which is about 80,000 naira. Then after that,
Yes.
you post your we have inventory of 240. Sorry, under the raw
Yes.
material first, you have open inventory, which is 80,000 naira, right? So then we have
Yes.
purchase of
Purchase of raw
240.
materials.
Yeah, purchase
Yes.
of raw material, which is about 240, right? So then
Yes.
we have carried inward too. So we have carried inward of about
Yes.
44,000, right? So when you add your
Yes.
carried inward, you add the carried inward to the purchase, which will give us, that's how much? 240 plus 44 is how
Carried
much?
inward. 248.
That's
248.
200. That's 248, right?
284, sorry.
Okay,
284.
204. Yeah, thank you. So from there, we have return outward. So yeah, we have
Yes.
return outward of 35,000.
35,000.
So you will less your return outward from the 200 and what did you call it? 84, right? So
Yes.
is that not what you call it? So when you less your
Yes.
return out, so whatever answer you get, you will add it to the opening inventory, the opening stock. So the opening stock is 80,000 naira, don't forget. So when you add the opening stock plus the answer you get after deducting your return outward, so what will be the answer? What will be the answer?
I'm
Are
on
you
it,
using?
please.
Okay.
I'm using the calculator. I'm coming.
Okay.
That would
I
be
hope all that.
329,000.
Okay, 329,000. So that 329,000 will be called the cost of materials available, or the cost of raw materials available. Do you understand? So the cost of raw material available is about 329,000, right? So then we have, are
Yes.
you following? Then we have closing inventory of 48,000 naira. So you will
48,000.
less, yeah, you will less your closing inventory. So if you less your closing inventory now, so the answer you get will be tagged the cost of raw material consumed. So that will be called the cost of raw material consumed. Are you following what I'm saying now? So then we have
Yes.
then after then we have the manufacturing wages. So the manufacturing wages is about 160,000 naira. Then we have the royalty paid. Royalty paid is 72,000. So when you add
Yes.
the manufacturing wages and the royalty, so that will be what? What will be the answer? That's 160,000 plus 72 is what? That should be 200
That has to be 232.
okay,
232.
232. Okay, 232 will be added with the cost of raw material consumed. So the cost of raw material consumed is 281,000, right?
Yes.
So when you do that now,
Yes.
so when you add that together, you are going to get a prime cost. So a prime cost of about 513. So from there
Yes,
you
sir.
can now
That's
start,
correct.
you can now start preparing your factory overhead. So under the factory overhead, we have depreciation of plant, which is about 56,000. Then we have the insurance expenses, which is about what, 28,000, right? Then
28,000.
then we have the factory expenses too, right? So when you add all,
66,000.
okay, it's 66,000, yeah. So when you add all the factory overhead together, so the answer should be around what?
I'm on it. 150,000.
150,000. So 150,000 plus the prime cost. 150,000 plus the prime cost.
663,000.
Okay, then we have the working in progress. So we have the working in progress. You add opening inventory. So you add opening inventory. When you add the opening inventory, you less closing inventory. So when you less the closing inventory, are you following? Have you added opening inventory of 58,000? So from there, you deduct the closing inventory, which is about 50,000.
Yes.
So the answer you get will be the cost of completed. Okay, no, yeah. The answer you get will be the cost
That
of
I think
what?
that's the cost of production, right?
Which one?
The
Yeah,
answer we get
yeah, cost of,
671. Will
yeah,
have the
that should
cost
be,
of production or production
yeah,
cost?
yeah, cost of production, cost of production. So some
Okay.
people used to call it, some call it cost of completed goods, while some call it cost of production. So either of the way, so you are still right. Are you following? So then, don't forget we have a.
Yes.
Are you following what I'm saying now? Are we still
And
on the
with you,
same
yes, we
page?
have 25% to address.
Okay, where's the 25% now?
Again, illustration 11.5.
Okay. So they said giving the same okay, said transfer the finished product from the factory to the marketing department of the cost plus 25%. So the first thing you are going to do here, are you following? Is find the
Yes,
25%
sir.
of 671,000, which is the cost of production, right? 25% of 6.
Yes.
Is others sorry, the others, are you listening or nobody is responding?
Hello, sir.
Yeah, are you listening?
I have a question. My question is this
I'm listening.
changes in work in progress.
Yeah.
I thought it's opening work in progress minus closing work in progress.
Opening work in progress
Minus closing work in progress. But here, like I'm seeing under work in progress, I'm seeing opening inventory again minus closing inventory.
yeah.
And looking at this in is inventory of raw material. So I don't understand. Can you clarify this? Do you get the question? Hello, sir.
It's like it's off 9.
Oh. The network is disturbing.
We can't hear you if you can hear us. Your network is not cooperating.
Work in progress. Opening inventory.
Majority of the calculation on this their material is not reliable.
Yeah, they made a very big mistake. Like there are mistakes on this their soft copy material. So, but
Terrible mistake.
what was actually the thing like you wanted him to clarify you? Is it the
That's where we
transfer?
are now. The transfer, how you
Because
manage
I'm not
to
seeing any transfer.
make,
Is it among the requirements?
yes, that's where
Ah.
we are now actually. That illustration
Well, even
11.5, there's
that
a transfer
requirement self, I didn't even illustration 11.4. I didn't even see any transfer of so thing to another thing. I didn't see it. I don't know.
there. Read it, check it again.
It's not
Okay,
there.
let
Okay,
me.
can you?
Okay, hold on, please. So let me answer. I'll answer your question also. How I wish I
Okay.
can provide answer to every question right now. So, but to answer his
But sir, do
question,
you get the question?
the question is trying to ask, right?
Yes. I said,
Is
did you
on.
get it? Because your network was having some issues.
Yeah, I get the question.
Okay.
He's trying to ask how we can how to calculate the 25%, right?
No,
Hello.
how to transfer the 25%. I know how to calculate 25%. It's how to transfer it at the cost, is what I'm asking.
Yeah. To
Okay.
calculate what the 25% there, do you know what they are talking about? Are you following, sir?
Sir, please,
If
I
you
want
look
to
at
ask a
it,
question. It's like your soft copy is different from mine because mine, I'm not seeing any requirements saying any 25%. Now, I want to ask,
Go
in
to
this
page
work in
277.
progress, in this is another page in my own. It's 276. And I have another
Check
page up,
277.
which is 34343. So all these pages, there are different pages here. So, sir, I want you to clarify something. This work in progress. Now, under work in progress, I thought is opening work in progress minus closing work in progress. But here, on what I'm saying here on this soft copy as I'm looking at it is under work in progress, I have opening inventory, then less closing inventory. So I want you to clarify this. Or is it mistake?
it's not a mistake. The work in progress, are you following?
Yes, I'm
Is
listening,
that,
sir.
yeah, you will add, we have a factory. After adding all the factory overhead, so we are able to get 663,000, right? So you now open a work in progress. So you add your opening stock. So the opening stock here states that 58,000 to the 663,000. Are you following?
Yes, sir.
Then, haven't done that, you now deduct your less closing stock. So you less closing stock. So whatever value you get after adding your opening stock to the 663,000, so you now deduct your closing stock from it. So when you deduct the closing stock, so you will get what we call the cost of production. Do you get what I'm saying?
Sir, it seems you didn't get her question very well.
Okay.
I think she's looking at the solution in our reading material.
Yes.
In the solution they put there, they put opening inventory instead of
Yeah.
opening work in progress, and closing inventories instead of closing work in progress. She was now asking, is
Yes.
it a mistake or is intentional?
Not.
No,
Because other even on the video recorded video, another what is it called? I've been coming across in manufacturing. I've not seen under work in progress, then opening inventory and less closing inventory. I've not seen it, so I'm surprised. I'm confused. So can you please clarify that?
okay. What you are trying to say is this: Yeah, they said opening work in progress, right?
Yes.
So then closing work in progress. You know, under work in progress, we have two things you should focus on, which is the opening. Are you following what I'm saying? Then the
Yes.
closing also. Do you get what I'm saying now? So if they
Yes,
are
sir.
saying opening inventory, is same thing as the opening work in progress.
Oh.
Do you get what I'm
Hmm.
saying now? So because we have two, so the opening and the closing. So the opening there, you have to add it with every other, the figures after, calculating the prime cost and all of that. So then you now deduct your closing work in progress from the figure you get after adding your opening work in progress. Do you get it now?
I didn't get it.
Okay, let me come again. The issue you are having now is that they use add opening inventory, right?
Yes, please.
Yeah. So what I'm saying in essence is this, that instead of using the add opening inventory, so they could have used add opening work in progress, right?
Yes.
Then use less closing work in progress.
Yes.
So the add opening inventory here. So what is work in progress? Maybe I should ask you first. I want no, are you there?
Sir, can you please continue? Like,
No, no, no,
as
no.
it is
You know,
work in progress, like I think their product they are working with. So they is not yet finished. So
I
is they
think
are still
halfway work, the work they have done halfway, that they have not yet completed.
they
That
have
just
not
needs
yet
some finishing
completed. They
touch.
are still on it.
okay, what about the closing?
Yeah, they have well.
No, no, no. You have to answer.
I think the opening is those they have at the beginning of the production. Then when they finish the production, is the work in progress that they have left.
Okay, what is now remaining? What is left? Okay.
Okay. Is it
Yes,
okay?
what?
Let me explain to you. When you hear the word opening work in progress, it's just the value of semi-finished good at the beginning of a period. Are you getting it?
Yeah.
And the closing there is the value of semi-finished goods at the end of a period. So both of them are still talking about finished good, right? Semi-finished good. So one is talking about at the beginning, and the other is talking about at the what? At the end. So the difference between both of them, I knew why I asked you. So if truly you understand what I want you to get. So the difference between both of them reflects the changes in the cost of materials used and the amount of work done on them during the what? The period.
Of production.
Do you get what I'm saying now?
Yes, sir.
So if I'm not saying, I don't know if you understand the concept, the angle at which I'm trying to explain. So the difference there is just talking about the changes in the cost of material that is used. So if I'm saying work in progress here, so they
Yeah.
gave us add opening inventory. And what is opening inventory? I'm asking question, please. Who wants to answer?
I think the raw material that was available at the beginning of
At
the
the beginning.
production.
So then, what about the closing inventory?
The leftover after the closing of the production.
So the difference between the opening and the closing is still reflects in the changes in the cost of production. So if they are saying at opening inventory, it's still the same thing as opening any work in progress. Do you get what I'm saying now? Are you there?
Yes.
So in that, I want her to respond. Do you get what I'm saying now?
Yes, sir.
So it's same thing as add opening inventory and same thing as less closing inventory. So in your own case, you can decide to use opening inventory or closing inventory. So that does not mean you are what? You are wrong. You get it?
Yes. I
So
think I'm
can
fine.
we? You are
Yes, we
fine
can
now,
move on.
right?
Yes. Yes.
So it's not a mistake. Like to me now, if I'm if I decide to say closing stock, you might want to ask that, does that mean the same thing? So inventory and stock are still the same thing. So if they are saying, like I said earlier, I said work in progress is classified into two. So we have the add, we have the opening, then we have the what? The closing. Do you understand now? Do you get it now? You're not responding again.
Yes, sir.
Okay. So now answer. Have I answered your question now?
Yes, you have.
Okay.
But
So
the percentage being transferring, I'm not seeing it here on my own soft copy. So
I think that's the issue. So
Check page 277. If you have page 277, check it. You will see illustration 11.5 towards the end of the page.
okay. Yes.
Uh-huh.
are you satisfied now? Hmm?
Okay.
Are you satisfied?
Yes, I've seen it. But how we are going to transfer it, the percentage to the factory?
Have you seen it?
Yes, I've seen it.
Okay. So let's continue then. So for the transferring, like I said, look at the board. Can you see the whiteboard here? So to do the transferring, that means we have the cost of production. And what's the cost of production? Cost of production
671,000. 671,000.
671,000 plus 25% of 600 and what? Are you getting it?
Yes.
So what will be the answer now? Can somebody tell me?
Okay. That is where they get the 167,750.
Yeah.
Okay, so that will give us 838,750.
That'll give us what?
838,750.
No, don't let us assume that. Okay, what's the answer for 25 over 167?
167,750.
167,750, right?
Yes.
So when you add them together, what's the answer?
838,750.
750. You get it now?
Yes.
So that 838,750, where it's the gross profit on the manufactured goods. Are you following?
Okay. Yes. I get that one now.
You
But
get
if
it?
this 25% is a margin, how are we going to undo it?
If the 25% is margin, so that means you have to calculate it like this, which is 60. Hold on. In this question here, did they call it imagine?
No, they didn't. They call it just
So you
plus 25%.
of the so you can't say it is margin. Do you
And no,
understand?
I'm the
Because
one asking now that if it's margin, how will I do it to add it to get it out?
the same way, like 61,700 plus 25 over 100 times 6 over 7 plus 25 over 100 times 671,000. Do you understand now? You know, like I said, when I was trying to, are we there? When I was trying to
Yes.
differentiate okay, when I was trying to differentiate between markup price and the margin, sorry, the markup and the margin, I said that there are two different concepts. So, and you have to understand that one, they are though people normally take them as, you know, as the same thing, but there are two different concepts that often, you know, confuse a lot of accounting and, you know, business. So let's say, let me give you, I said markup price is the percentage amount by which the cost of product is increased to arrive at the selling price, right? While margin
Yes.
is the percentage of revenue that is left after deducting the cost of goods sold. So take for instance now, if I want to calculate the markup, so let's say for example now, suppose a product costs 10 naira to produce and it is sold for 15 naira. So the markup is what? What would be the markup price?
Let me get the question again, please.
If I produce a good, maybe I produce a product for 10 naira and I sold it for
Okay.
15 naira. So what's the markup price?
Okay, that is five naira.
No, it's calculated based on percentage. It is 50%.
50%, yes.
Yeah.
Yes.
So then for the margin, what would be the margin?
Imagine, sincerely, I don't know.
Okay. You know, for the markup, the formula
Yes.
for markup is margin over, are you following? 1 minus margin multiplied by 100. Do you get that now? So for the markup, that's, so if the markup price is 50%, so the margin will be 33.3%. Why? Because the formula for calculating markup is different from the margin. So that will be that your margin will be, your markup formula will be margin divided by 1 minus margin multiplied by 100. While the margin formula will be the markup divided by 1 plus markup multiplied by 100. Do you understand? Do you understand? Are we there?
Yes, I think I get it. Thank you, sir.
Okay, all right, no problem. So, any other question pertaining to the, when is the exam?
We are still waiting for docket to. They have not given us.
Our exam is next week, oh. By
They
this
say it's
time
next
next
week,
week,
but
we
I'm
are
not sure if they
already
will not
done.
if they have not postponed it.
I don't know.
Because
They will
one
not
Mr. Fashion are coming from ICAN today. While we were talking, I told him I don't know my exam center yet, no docket yet. He told me that he will get
docket
back
will
to
be
me.
maybe 2 days before this thing.
Okay, it's all right.
Yes, that's how it's been done. So
It's all right.
by this time next week, we're already done with accounting. So next week, the next day we'll not do economics and
Yes, if we can, that's why I said you guys should make use of that platform. So
you should make it
let's
a
say
what?
the WhatsApp platform. So if
Okay.
yeah, let's see if probably we we are going to meet on Saturday, I will let you know. So if
It's
you
all
are
right.
going to meet on Saturday,
Okay, on Saturday, sir, let it be evening, because it's my church day.
all right, no problem. So if we are going to meet on Saturday, I will let you guys know.
It's all right. Thank you.
All right.
We
Thank you.
really appreciate your time.
Yes,
I know
sir.
it's not easy to have been at work since morning and you still create time to be with us this evening. I personally appreciate your effort.
Yes, sir.
The person that took us